To show some of the results of our investment over the past 2.5 years. We've rolled out a branch network over the past couple of years. We currently have 164 branches, and what that has translated to has been an increase in customers, an increase in transactional activities, and more importantly, it's also enabled us to improve our deposit mix, so that at the end of 2010, the percentage of our low-cost deposits to total deposits was 55%. As at Q3 2011, that had improved to about 68%.
Okay, talk us through the impact of the higher interest rate environment on your numbers going forward. What are your expectations? There's a general view that very liquid banks should benefit from higher interest rates. What should we expect from Stanbic IBTC?
Well, we believe that we are rightly positioned to benefit from the higher interest rate. Like I mentioned earlier, our deposit mix has improved, and that would enable us to take advantage of improved margins. But having said that, because we still do have a sizable corporate book, we will experience some margin compression. Also, the expectation would be that with interest rates going up, there would be an increased likelihood of loan delinquencies. Now, we believe that the risk policies that we have in place, together with our continuous drive to attracting more low-cost deposits, will actually help us to mitigate this situation.
Right. A quick point on your costs. Obviously, we know that you are rolling out branches, and that has come at a huge cost, and that's put some pressure on the bottom line so far. But what else can you do? One point that one analyst pointed out concerning your results is that staff cost in particular has been somewhat stable in terms of the headcount, at least. How are you able to manage that, and what other cost cutting measures are you putting in place, or should I say cost control measures putting in place to weather this time of expansion?
Okay, we're very pleased with the results and our focus on costs, because our costs have been able to stabilize, after steady increase over the past 3 years. Operating expenses came down about 7% to 10 billion. We believe that this is because we have had a focused approach to cost control. We intend to keep our eyes on the cost line. Obviously, we are optimizing costs because we still will invest in the areas that we need to. But we've put behind us the major expenses, which is the branch network. We've just installed a core banking system, and we believe that going forward, we would even have greater control on the cost line.
And a final point, obviously we're at the event Project 50 and celebrating 50 years of capital market regulation. Stanbic IBTC, of course, has a very rich history in Nigeria's capital market, more so from the investment banking side. What are your expectations for the next, say, 10 years?
Okay. Well, we're excited. As you are aware, Stanbic IBTC is the leader in investment banking. It's also the leader in stockbroking. It's the leader in the wealth business. We believe that the worst is over for the Nigerian capital markets. Over the past couple of years, the markets have strengthened. There's greater corporate governance. There's a better team in charge of the affairs, regulating the market. And we think that what is needed now is just investor confidence. We are actively involved in the changes that the Nigerian Stock Exchange are going ahead with, which is, trying to encourage the appointment of market makers, for instance, making it much more efficient to transact on the stock exchange. We believe that with the reforms, the ongoing reforms that the federal government are pursuing in the oil and gas sector, in the agriculture sector, in the power sector, that this will ultimately translate into catalysts for economic development, which will then follow into the capital market. And we are well positioned to take advantage of that. So we are cautiously optimistic, and we are ready and positioned to take advantage.